3 million Americans are sitting on a government back payment they were never told about, and some of them have already lost part of it simply by waiting too long. That number is not an estimate. The Social Security Administration confirmed it. 3,100,000 people received checks totaling $17 billion in retroactive Social Security payments after Congress reversed one of the most damaging benefit cuts in the history of the program. The average check was $6,710. But here is the part nobody is talking about. A significant number of those payments came in short. Some people were underpaid, and some people who should have been in that group of 3 million never received a single dollar. There is also a trap buried inside the payments that already went out that could quietly cost you thousands more in Medicare bills 2 years from now. In a moment, I'm going to tell you exactly who is being shorted, what the specific numbers look like, and what you need to do before you lose any more of this money. But first, you need to understand how this cut worked. Because if you are a teacher, a firefighter, a police officer, a federal employee, or the spouse or surviving widow of any one of those people, there is a real chance you are in this story. My name is Mark Calloway. I spent over a decade inside the financial system, watching people leave money on the table, not because they were careless, but because the rules were written to be confusing. This channel is the briefing you should have gotten before you retired. For 40 years, the federal government ran 2 separate rules that quietly reduced Social Security benefits for millions of Americans who worked in public service. The rules were called the Windfall Elimination Provision and the Government Pension Offset. Most people who were affected never fully understood what was happening to their money. They just knew their Social Security check was smaller than it should have been. But the reduction was not random. It was calculated, and in many cases, it was severe enough to change how people lived in retirement. Here is how the Windfall Elimination Provision worked. When Social Security calculates your monthly benefit, it takes your lifetime average earnings and applies a percentage to different portions of that history. For the first portion of your earnings record, the standard formula applies 90%. That first portion is where most middle-income workers receive the bulk of their benefit. But if you also had a pension from a government job that did not pay into Social Security, the formula did not apply 90% to that first portion. It applied 40%. That one change slashed the most valuable part of your benefit calculation. The maximum reduction under the 2024 formula was $587 every single month. $587 every month for the rest of your life. The average reduction across everyone affected was about $350 per month over a 20-year retirement. That is $84,000 in lost Social Security income. Most people had no idea the rule existed and no idea how much it was costing them. The government pension offset worked differently, but the result was even more extreme. This rule did not touch your own earned benefit. It attacked your spousal or survivor benefit. If your spouse or your late spouse paid into Social Security their entire career, you are normally entitled to a spousal benefit based on their earnings record. The government pension offset subtracted 2/3 of your government pension from that benefit. Therefore, if your pension was large enough, 2/3 of it wiped out your Social Security spousal or survivor benefit completely. Not reduced it, eliminated it. Nearly 70% of everyone affected by the government pension offset had their entire spousal or survivor benefit reduced to 0. The average government pension of those people was $3,502 per month. 2/3 of that is $2,335. That exceeds most spousal benefits. Therefore, for millions of public workers and their spouses, the Social Security benefit they had earned and expected simply disappeared. Now here is who this affects, because I want you to be able to place yourself or someone in your family in this story before we get to what needs to be done. Teachers are the single largest category. 15 states, plus the District of Columbia, have public school systems where teachers do not pay into Social Security at all. Their retirement comes through a separate state pension system. Those states are Alaska, California, Colorado, Connecticut, Georgia, Illinois, Kentucky, Louisiana, Maine, Massachusetts, Missouri, Nevada, Ohio, Rhode Island, and Texas. If you were a teacher in any of those states, and you also worked other jobs during your life that paid into Social Security, the Windfall Elimination Provision was cutting your benefit every single month. Federal employees hired before 1984 are the second major group. The older civil service retirement system did not include Social Security. Therefore, if you spent your career as a federal employee under that system, and you also had Social Security credits from earlier work or a second job, those credits were being quietly cut every month you collected them. Police officers and firefighters in many cities and counties fall into this group as well. Many local governments opted out of Social Security and set up their own pension systems. But if their employees also had Social Security credits from other work, the Windfall Elimination Provision applied, and the spouses and widows of all of these workers were subject to the government pension offset, which, in close to 70% of cases, wiped out the spousal or survivor benefit entirely. On January 5, 2025, Congress passed the Social Security Fairness Act, and the President signed it into law. Both provisions were eliminated permanently, and the restoration of benefits was made retroactive to January of 2024. That meant everyone affected was owed back pay for every month. Their benefit had been reduced since the start of 2024. The Social Security Administration moved faster than anyone expected. By July of 2025, they had already processed and sent 3,100,000 payments, totaling $17 billion. The average retroactive lump sum was $6,710 per person. People whose spousal or survivor benefits had been eliminated entirely saw their monthly checks go up by an average of $1,190 per month going forward, in addition to the back pay they received. But this is where the story gets more complicated, and this is the piece that determines whether you have received everything you are actually owed. A large number of people never filed for Social Security benefits in the first place. They were told years ago that the government pension offset would eliminate their spousal or survivor benefit entirely. Why file paperwork for a benefit that is going to be zeroed out? So they never applied. After the law passed in January of 2025, 278,000 people filed new claims for the very first time. But the Social Security Administration applied a standard 6-month retroactive limit to those new filers, not 12 to 13 months of back pay like everyone else received. 6 months. Therefore, if you filed a new claim in April of 2025, instead of receiving retroactive benefits going back to January of 2024, you may have only received back pay covering 6 months from your application date. Depending on your benefit amount, the difference can be $4,000 or more. Senators and advocates have challenged this interpretation. The argument is that these people were locked out of filing by the existence of the government pension offset itself. Applying the standard 6-month limit punishes them for following the advice they were given at the time. As of today, the ruling has not been reversed. Therefore, if you filed a new claim after the law passed, and your retroactive lump sum is smaller than the full period back to January of 2024, there is a formal reconsideration process available to you. I will walk you through it step by step at the end of this video. But first, I need to tell you about a trap sitting inside the payments that already went out, because this one is catching people completely off guard. If you received a retroactive lump sum in 2025, that payment was counted as income for 2025. Up to 85% of Social Security income can be subject to federal tax, depending on your total income for the year. That is the immediate issue, and it is manageable. The IRS has a specific provision called the lump sum election method, described in IRS Publication 915. That method lets you calculate the taxable portion of the payment by allocating it back to the years in which it would have originally been paid, using each of those prior years as the income baseline, rather than forcing the entire amount into your 2025 return. It can significantly reduce the tax bill on a large back payment, but the Medicare impact is slower, and it is sneaking up on people right now. Medicare sets your premiums based on your income from 2 years earlier. That means your 2025 income determines your 2027 Medicare premiums, the same year your retroactive lump sum arrived. If that payment pushed your 2025 income above $111,000 as a single filer or $222,000 as a married couple, your Medicare premiums in 2027 will be higher. The first surcharge tier alone adds approximately $840 per person per year. Crossing $1 over the threshold triggers the full amount. There are 2 things you can do. First, use the IRS lump sum election method on your 2025 return, described in IRS Publication 915. That method allocates the back payment across prior years rather than landing it all in 2025, which can reduce both the tax bill and the income figure Medicare will use. Second, file Form SSA-561 with Social Security to request a premium review with documentation showing the income was a one-time, non-recurring payment. It does not always succeed, but it costs nothing to file. Here is what you need to do right now. Step 1. If you were a teacher in any of the 15 states listed in this video, a federal employee under the Civil Service Retirement System, a police officer or firefighter in a non-Social Security covered pension system, or the spouse or surviving spouse of any of those workers, log into your My Social Security account at ssa.gov and review your payment history and your current monthly benefit amount. If your monthly benefit increased, and you received a retroactive payment, verify the numbers look correct. Step 2. If you were never in the system because you were told the government pension offset would eliminate your benefit and you still have not filed a claim, call the Social Security Administration at 1-800-772-1213. Tell them you are calling about the Social Security Fairness Act and that you want to file a new spousal or survivor benefit claim. Every month you wait is a month of retroactive pay you cannot recover under the current 6-month rule. Step 3. If you filed a new claim after January 5th of 2025, and your retroactive lump sum only covers 6 months, rather than the full period back to January of 2024, file Form SSA-561. That is the request for reconsideration. Submit it in writing. It creates a formal record of your challenge and gives you standing if this ruling is ever corrected. Step 4. Bring your 2025 tax return to whoever prepares your taxes and ask specifically whether they applied the lump sum election method from IRS Publication 915 to your Social Security back payment. If they did not, have them recalculate. The savings can be substantial, and it may also protect your 2027 Medicare premiums. Step 5. If your new monthly benefit still does not match what you calculated it should be based on your earnings history, request a written benefit calculation breakdown from the Social Security Administration. You are entitled to see exactly how they arrived at your number. If the math is wrong, file Form SSA-561 and request a formal reconsideration in writing. The money was taken from you for 40 years. Congress gave it back. Make sure you received all of it.